Welcome to Standard Chartered Money Insights, a podcast series by Standard Chartered Bank that brings you market views and insights on the go.
Hello listeners, you are now plugged into Standard Chartered Money Insights. I'm your host, DJ Cheong, an investment strategist at Standard Chartered Bank, and this is the Weekly FX Navigator, where we talk about key FX drivers and catalysts for the week ahead. In today's episode, we will focus on the near-term outlook and potential opportunity for the New Zealand dollar, or the Kiwi for short, against the dollar. From a fundamental perspective, the Kiwi looks set to be supported by the Reserve Bank of New Zealand, or the RBNZ, who will likely be one of the first movers among developed markets to start normalising monetary policy. At last week's meeting, the central bank projected that it might begin to hike rates as early as September 2022, as long as the economy continues to grow as they expect. This should keep Kiwi bond yields on an upward path, and the yield curve could steepen, attracting capital flows. New Zealand has a well-documented COVID-19 recovery and has already begun a travel bubble with Australia, which is expected to benefit the services sector. The manufacturing sector has also been robust, and this has supported employment and wage growth, providing the RBNZ with the likely policy normalisation route to constrain inflationary pressure and cool down the hot domestic housing market. Terms of trade also remain supportive. New Zealand exports are mainly agricultural, and China is the country's largest export market. Food prices will likely remain robust, and Chinese demand for foodstuff is less sensitive to any tightening of China's credit impulse. In other words, demand for New Zealand exports should remain strong. Now, the Kiwi has traded in a tight upward trending range. We would prefer to buy on a dip below 72 cents against the dollar. We also expect strong defensive support between 70.70 and 71.10, and we see this support zone holding as the next leg of the Kiwi rally develops. We also anticipate a rally through the February high at 74.65, which should continue towards 75.60, a level last seen in 2017. The speed of this rise will likely depend on how quickly the broad dollar downtrend unfolds. And that marks the end of this episode for the Weekly FX Navigator. If you would like to read our latest publications, please visit our website at se.com under Latest Market Insights. If you found this podcast insightful, please rate and drop us a review wherever you get your podcast from. Thanks for joining me on the podcast today.
Thank you for listening to Standard Chartered Money Insights, a podcast series by Standard Chartered Bank. For more details on the latest market insights, subscribe to Standard Chartered Money Insights.